This show is sponsored by HiveMind CRM. It is more than just a CRM. It is a real estate and business mastermind that comes with an all-in-one CRM. You can have unlimited websites and users. You can call, text, RVM, and email all in one user interface. And you can set up custom automations for any type and multiple businesses. 65% of companies start using a CRM system within the first 5 years of business. Once implemented, the HiveMind will save you on marketing, give you more time, and make more money. One of our users had his first $100,000 month using our system in June. We want to see you automate and accelerate your business. Text us at 210-972-1842 for future meetings, and of course to get our $1 course on how to make more than 6 figures on one land deal. You can schedule your free demo today at hivemindcrm.io.
Hello, welcome to today's show. We have a special guest today. We're going to learn a lot about stuff that I don't know. I mean, Anthony, I have my co-host Anthony here as well, but we're going to learn about some stuff that we don't know about, and we have an expert here to talk about it. We have Mr. Zach Wilson from Quest IRA. How are you doing today?
I'm doing good. How about you guys?
We're good,
man. I'm glad we're having this conversation. Yeah, I'm excited. Like I said, this is something that I've been wanting to learn and talk about for a while, so it'd be pretty good for our audience to learn and like, what kind of opportunities can we look out for? So we're looking to like always diversify our own investments, but then also find somebody else, maybe if they have an IRA, and we always have people offering us cash now. Like we're actually going through it right now. Somebody's trying to move some capital from the IRA into an investment with us. And it's been a little challenging, man. So I'm pretty excited to talk about this today.
Yeah, absolutely. And this is something that, it's been available for a long time, and it's just now starting to get traction, right? It's just now starting to become more and more popular. People are hearing about it, especially when they want to move in from markets out of the public stream into the private, into the private sector, right? When they're looking for alternative assets, this is where self-directed IRAs really have their time to shine. So yeah, it's something that we really try to spread, as much information. We have tons of education on our website and our YouTube channel. And so the more awareness we can build about them, kind of the better for everybody.
Hey, so why don't we take it from the top, man? Why don't you tell us what an IRA is, and when does a person need to open one, or why might they want to look into opening one?
Yeah, absolutely. So an IRA is just an individual retirement account, right? It's going to function pretty similar to like a 401k. The only difference is instead of it being tied to an employer, it's just for you personally, right? That's really the only difference. Now, within IRAs is that term self-directed IRA, right? What is a self-directed IRA, and how does it differentiate from a normal IRA? Well, to be honest with you guys, that term self-directed is really just a marketing term. There is no legal distinction between a self-directed IRA at a custodian like Quest, which is where I work, versus IRA at like a Fidelity or a Charles Schwab, right? The only difference is the custodian themselves, right? You can have a self-directed IRA at Fidelity, but they, as the custodian, only allow you to invest into publicly traded assets, right? That's their niche. That's what they focus on. Whereas Quest, we allow you to take those same retirement accounts, except put them into the privately held assets. Specifically, real estate style investments is what we as a custodian specialize in, right? So it's for everybody. It's that same account, just depends on what you're looking to get into, right? So honestly, the earlier you can get an IRA set up, the better. The younger you are, the more attractive things like the Roth IRA come in, right? They look really good because instead of it being pre-tax, where you're getting tax deferred growth, now you're getting post-tax, right? So you're getting tax-free growth. There's not many accounts that have the power that the Roth IRA has.
Okay, man, we're going to have to distill some of that down a little bit, even for myself, right? I'm sure our audience have all the same questions I have swimming around. Yeah. So why do you want a custodian to hold on to your capital instead of you just doing your own investments privately out of your own bank account? Where's the benefits, and then where are the tax advantages in this?
Yeah, so whenever we're looking at the different types of benefits for an IRA, there's really 3 distinct benefits, right? The first one is the tax advantages, right? So whenever you're making your investments, let's say you're doing a fix and flip, right? If you do that investment personally, right, you purchase the property, you fix it up, you flip it, any of that profit that's coming back, if it's coming back to you personally, you have 2 options. Either you pay the taxes on it, or B, you try to put it into something like a 1031 and defer those taxes until later. All right, now let's look at that same example, except done in an IRA. right? It doesn't matter what type of IRA it is. It could be traditional, Roth, SEP simple. We'll go over all of those, but it's done in an IRA. Well, the IRA again purchases the property. The IRA pays contractors to fix it up, and the IRA sells that property. When it receives those funds, now it negates the need for a 1031, right? By nature, that IRA is getting those funds tax deferred, or in some cases, like the Roth IRA or even the ESA, it's getting those funds and growing them now tax free. So it means you're not restricted on the next investment like some 1031s are, right? They're going to restrict you on the type of investment you can make, the timeline, the value. You get those funds back 100%, and now you can do as you please, either putting them in a self-directed IRA and redirecting that capital to a new investment, or putting them into something like a brokerage IRA and just letting someone manage it for you. All right, so that's going to be the first big one, those tax advantages. The second one, diversification, right? And this is where custodians that focus on alternative assets, this is where our role comes in, right? Because we're allowing you to take your money out of the public market, right? If you talk to a financial advisor, he's going to tell you, okay, let's get you in some low yield, low risk mutual funds, right? Maybe let's buy some of those big blue chip stocks, and let's maybe purchase some bonds, right? But all of those options are really just putting your egg in different parts of what is overall the same basket, right? When you're in alternative assets through a custodian like Quest, it's allowing for that true diversification away from the public market. Now you're looking at things like real estate. You're looking at private money lending. You're looking at syndicating, all right? So it allows really for that true diversification into a market that most people know a lot better than the public market. And finally, kind of segueing from that last point, is investing in what you know best, right? Through a self-directed IRA custodian, you have full control. You're in the driver's seat when it comes to these investments. Now, some people have knowledge of the public market, right? They have knowledge of the stock market. That's where they're comfortable. Awesome. For a lot of people, that's not their niche, right? They know they put funds into a retirement account like a 401k, and someone manages it. Someone puts the money in the market. Someone makes decisions as to when to pull it out, what stocks to buy, what funds to go into, right? But if you want full control yourself, now you get to build off of the base of knowledge that you've built. So if you've got real estate knowledge, right? If you've got knowledge in private money lending or syndicating, you get to take advantage of that and leverage your retirement funds to build that future instead of just trusting it to someone who's managing it for you. So I'd say those are the three big advantages when it comes to an IRA.
Now, a lot of people, does this count as a qualification as a accredited investor if you have IRA funds, or does it have to be in like a personal account?
So when it comes to being an accredited investor, I'm almost positive the qualifications are looking at either your income, right? So I think it's if you're filing single, it's like $200,000 a year in income for the past 2 years, or $300,000 if you're filing jointly, or $1 million in net worth, right? Whenever they're running those, they're looking at you personally, right? So the funds held in your IRA are going to kind of be separate from those qualifications.
Okay, that makes sense. Okay, that was a blurred question because I'm like, I don't know the answer to that one, and I'm like, I don't know if it would count towards your person.
I mean, I could have made something up just now. I could have. Yeah.
No,
but it's
cool, man. So how do we move our funds in and out of the IRA? So right now we have somebody who does have cash in the IRA. They're going to move it into an investment with us, and it seems like there's a little bit of hurdles and red tape. So can you tell us a little bit more about how? Okay, I want to invest into something. I want to hand it over to Daniel. How do I get my cash from inside my IRA into Daniel's account now? And how do we take title to the property, that kind of stuff?
Right. So really, there's a couple of factors at play here. Honestly, the biggest one is probably the custodian themselves, right? So like I said, we can have a self-directed IRA with Quest, or we can have a self-directed IRA in a public custodian like Fidelity. Well, if you try to make that investment with Fidelity and it's a private fund, right? It's private capital. Fidelity's going to tell you, hey, you can't do that. They're not saying you can't do it because it's not possible in an IRA. They're telling you you can't do it because they don't hold those types of assets, right? So let's say you want to get into it, you want to leverage your IRA funds, right? You get in contact with someone like Quest, right? At Quest Trust Company, what we're going to do is we're going to establish the same type of account for you, right? Then from there, we're going to move the funds over. Because they're coming from another IRA, it's as simple as filling out a transfer form. We're going to initiate that movement of funds on your behalf, Now, if it's going from IRA to IRA, it's super simple. It's not even reported to the IRS. Same thing as moving funds from like a checking account at Chase to a checking account at Capital One. The IRS doesn't care what you do with that money. Now, if it's coming out of like a qualified retirement plan, let's say you had like a 401k, 403b, TSP, well, it's still pretty simple, but you just want to be sure you have A, separation of service, so you no longer work for that employer, or B, you're going to ask them if they allow for in-service withdrawals, otherwise known as in-service rollovers. That's a whole different conversation. We can get into those, but essentially, we're going to give you some delivery instructions. You give it to that administrator, let them know you want to roll the funds over into an IRA. Then they send the check over to us. Right? While we're waiting on those funds to arrive, it's as simple as you calling us and letting us know, hey, I want to make an investment within my IRA. Awesome. All right. So you give us a call. You're not getting an automated line, so you're going to have someone answer the phone for you. We're going to ask a couple questions about this investment. All right. Just tell me a little bit about what that investment looks like. And then you're going to tell me, hey, we're investing into a fund that's looking to raise capital for a syndication, or a fund that's, let's just say it's a fund, right, in general. Awesome. We'll get you in contact with one of our private entity processors. They're going to work with you as well as with the fund manager to gather up all the documentation, right? So we're going to help you gather up things like the subscription agreement, the operating agreement, stuff like that, right? Which can seem a lot up front. Right? For someone who's just getting into this, all these documents are like, oh man, it's a whole lot. And we realize that, right? We realize that you're going from telling or pressing a button on Fidelity's portal, right? That you want to purchase a position, from now you're working with actual documents in your hands, right? So because of that, we're going to hold your hand throughout every step. Right? We're going to let you know, here's what we're looking for. Here's what it needs to say to be, one, in compliance, and two, to be vested correctly in the name of the IRA. All right. Now, mind you, all of this is happening while we're still waiting on the funds to arrive. That way we're knocking out two birds with one stone. All right. So once we get it in, we are going to audit it internally, right, to be sure there are no blatantly prohibited transactions putting your account at risk, right? And again, to be sure it's vested correctly. And then once we've got the documents in and the cash is available in the account, we can fund that investment in 24 to 48 hours. So we really make it as simple as possible, knowing that there's a lot of moving parts with investments like this.
I'm really glad you broke the clarification as far as whoever is guiding that portfolio, they might have parameters that they don't do. And I think that's going to differentiate. Like you need to look into who you're creating the IRA and who you're self-directing that, who you have as that. What was that word you used?
The custodian.
Custodian.
Yeah,
like,
yeah.
I'm like, it's not counselor, it's something else. So whoever your custodian is really important, because your custodian is going to make or break what you can invest in as a whole, because it can really put dampers on what you want to really invest in. You know? Yeah,
exactly. And it's not always like when they tell you can't do it, it's not always them trying to prevent you from doing it, right? Some of them just don't know. Simply because you're still talking to another human being, right? If this person doesn't know that there are private asset custodians with self-directed IRAs, they're going to tell you like, oh, you can't do that in an IRA, right? Hey, that happens, right? We're not saying that they're doing this on purpose. Just keep in mind that yes, you can. Just about any type of investment you can make personally, you can make within an IRA. There's a few exceptions when it comes to that, right? What are the restrictions? You can't invest into collectibles. So things like fine vintage art, right? You can't do vintage cars, things that it's hard to get a hard appraisal on, right? It's more subjective. You can't do that. And you also can't invest into life insurance policies. You can see the problem there if we allowed people to invest into other people's life insurance contracts, right? So those are really the two restrictions that you can't do. Any other type of investment, you can probably do it within an IRA. Just about the custodian you're talking to.
Right. Let's talk about taking title to the property, right? So now Daniel sells me some land. I'm going to invest it from my IRA account. So the IRA, actually, the company takes title to the property?
Right. So the best way to think about it is that the IRA is its own entity, right? It has its own name. It has its own address. It even has its own social security number in the form of an EIN, right? So the IRA as an entity is going to be taking title. So for example, if you had an account with Quest, on the warranty deed, it's going to show Quest Company, FBO, your name, IRA, your account number. That's who's purchasing the property. All right. So because of that, now you take title to it. Anything that needs to be done within that account, or within that property, has to be paid for out of the IRA. And when it comes to this, I think it's important to mention the restrictions to an IRA, right? Because it's a tax advantaged account. The IRS says, okay, there are certain people that you cannot commingle your funds with. That list is known as your disqualified parties. If you look on the IRS, it's IRS section IRC 4975. It gives you it's a whole thing. It's a whole list, and it's kind of hard to read. It's a little dense, but we've broken it down. Essentially, it's going to be you, yourself, all right, as your spouse, your lineal ascendants, so parents, grandparents, your lineal descendants, so children, grandchildren, their spouses, and any companies that those people own, control, manage, or are highly compensated by. Essentially, any companies that they're affiliated with, right? Now, the reason those people are disqualified has to do with the flow of inheritance, right? So if let's say my dad has an IRA and he wants to invest, or I want to invest with him, or he wants to invest with me, whatever, right? What I'm really doing is growing an account that I'm going to eventually inherit. This is going to be considered self-dealing, right? What the IRS does not want to happen. So that's why they put restrictions on the up and down family trees. Now notice sideways, doesn't matter. Why? Because as much as I love my sisters, they're not getting my inheritance, right? That's just usually not how it works. Now, obviously, there are certain situations in which that's the case, and then they'll become disqualified as the beneficiary. But for the most part, those are the general rules, all right? So as far as the structure of these investments go, it's really working the exact same. The only difference is now the IRA is taking title instead of you personally.
Okay.
Yeah, I didn't realize we like I said, we were doing paperwork with our first IRA, and we realized that, like, okay, this is new. Never knew that. Like, there's this dealing with this. It's kind of been eye opening to us. It's kind of interesting because we're having this conversation now, and we've been dealing with all this paperwork over the last 2 weeks. So kind of like understanding this from our side of it as part of the person taking the money in, as an investor investing that capital from an IRA person. So it's kind of interesting having and seeing what happens on our side too versus actually creating it on their side. So there's different aspects on both sides that we're seeing now.
Yeah, exactly. And you as the one raising the capital from the IRA, right? It's not until you start to deal with it, like you said, that you realize, like, oh man, it needs to have like this exact name. All right. It's got to say exactly word for word this, right? And now we have to use this address, and we can't use their social security number. We have to use the IRA's EIN, right? And it's all these different factors that you don't know until you get there. But once you do your first one, the next ones become much easier. You realize you're just dealing with another entity, except they're a little bit more strict as to what their name is.
Yeah, we learned a lot this week, man. Yeah, it was quite a bit of back and forth, and we're not used to it because we've received private capital for deals, but receiving it from an IRA, it was just a little bit more challenging. But like you said, I think we've got our bearings now. It looks like the funds should be headed our way now. It was just a little slight learning curve, but it's kind of cool, man. Let me ask you this: so what are the tax advantages of investing from inside of an IRA versus just investing out of your LLC account, right? So how does that work? Yeah,
so really when it comes to the tax treatments and the tax advantages that these accounts can experience, it's going to be up to the type of account that you've established, all right? So here at Quest, we hold 7 different types of accounts. We have traditional and Roth IRAs, which can be your personal accounts. We've got your employer plans, right? These are geared towards self-employed individuals who want to take advantage of those higher contribution limits, right? So this can be the SEP, the Simple, and the Solo 401k. And then we have our specialty plans, right? These aren't retirement accounts, but these are accounts that can be self-directed, just like retirement accounts. And that's going to be the health savings account, the HSA, and then the Coverdell ESA, right? Which is an alternative to things like the 529 plan, right? So these are always going to fall into one of 2 categories, either a pre-tax account or a post-tax account. So for example, let's look at the traditional and the Roth IRA and compare them. So the traditional IRA, most common account in the United States because of that pre-tax status. Whenever you're moving funds over from like a 401k, unless you've specified otherwise, you've been putting pre-tax contributions as well as your employer. All right. So when you move them over, you're not looking for a tax hit. So you just want to land them in a pre-tax account, that traditional IRA. When the funds are in there, like I said, any profit that is being made is coming back non-taxed. This is a tax exempt entity, right? It files all the same documents as things like a charity, a nonprofit organization, a church, right? It falls under that same IRS code. So when you're getting the funds back, they're coming back 100% to the IRA, and they're growing tax deferred. Now, come retirement age, as long as you're over the age of 59 and a half, you're taking out all of those funds, not tax-free. You're getting them applied to your income, and you're paying the taxes as your income, right? They get added to your adjusted gross income for the year in which you took that distribution, right? The reason people will stick with this is because they know down the road they're going to have a lower income, right? Either they're going to get out of retirement and they're just going to be living off their savings or their pension plan or Social Security, whatever it is. Either way, they know their income bracket's going to be a little bit lower. Now, let's flip that. Let's look at the Roth IRA, the post-tax account. Personally, my favorite account, right? Because that is post-tax. Any funds you're getting back, just like the traditional IRA, are not going to be taxable, except instead of growing tax deferred, they're growing tax free, right? That means you take, let's say you max out your contributions when you're younger for 5 years, you got $30,000, right? So it's $6,000 a year. So over 5 years, $30,000. From there, you grow that $30,000 into $100,000, $500,000, $1 million if you're lucky enough, right? That means come retirement age, as long as you've had a Roth IRA open for 5 years and you're over 59 and a half, you've got $1 million tax and penalty free. It's the beauty of a Roth IRA. It's my personal favorite account. It's got some advantages as well outside of just the tax-free growth, like the contributions, right? So because they're post-tax contributions, the IRS has already gotten its slice of the pie. It no longer cares what you do with that money. All right. So in that same example, over 5 years, I put $30,000 in, except at the end of year 5, I decide, man, I need a new car. I need a new car, and I do not want a car payment, or I want a very minimal car payment. Because that's a post-tax account, I can take out those contributions, right? The contributions at $30,000, tax and penalty free. And I get to submit it as I please. Right, so that's really the two key differences. No matter what, funds are coming back tax-free. It's just a matter if they're growing tax-deferred or growing tax-free.
So can you have multiple accounts? Because I know you kind of mentioned a little bit earlier that you can do 6,000 per account. So can you have a Roth and a self-directed that you kind of, I can put 12,000 away annually and get multiple accounts? Or is there a limit on that if you get multiple extra accounts?
So unfortunately, no, right? So that $6,000 limit is not only going to be combined with all of your Roths, it's all of your personal accounts. So let's say I can have multiple accounts, right? But let's say I've got a traditional and a Roth at a private custodian like Quest, and then a traditional and a Roth at a public custodian. Each are going to play their own different roles. I can contribute 6,000 amongst all of them, right? So it wouldn't be per account. It's going to be 6,000 amongst all.
And this is annually?
Yeah, per year. Once I get over 50, it bumps up for the personal accounts. You got $1,000 catch up. For things like the employer plans, it can be as high as $3,000 catch up, $6,500 catch up for things like the solo 401k. So it really depends on the type of account. But once you hit past 50, all those contributions go up a little bit.
Got it, man. So why would somebody want to open a Roth? Like a self-directed over a Roth? Why would they do that anyway? Is there any advantage to opening one over the other? I know one you said will grow tax-free completely. So what's the advantage of the other one, of the self-directed? So
keep in mind, that's that term self-directed, like I said, just a marketing term, right? So there's no legal distinction between my self-directed Roth here at Quest and the Roth at Fidelity. They're both identical, right? The only difference is the investments themselves. So I would say that the advantage of when it comes to self-directed versus non-self-directed is really just about how active you can be, right? How active you want to be. When I'm talking with a client, I'm having a consultation with them, and they're considering a self-directed IRA. That's always my first question. All right, how active are you looking to be with your investments? Are you looking to just put money away, have it managed, and slowly watch it grow? If so, that's a brokerage IRA. You put that away, you don't think about it, right? You let the money grow naturally. But if you're someone who's looking, if you got an entrepreneurial mindset, you want to take advantage, you want to be in control of those funds, now a self-directed IRA starts looking like you're the best option for you, right? Because now you're in charge, right? You got some deals, you've got a network that you've built, you want to take advantage of that network, self-direct those funds because you feel like you can beat the returns from the market. All right. A lot of people are coming over this way, especially, with the market in the condition that it is right now. This is that alternative path, right? If you feel like, okay, I can make some profit here, I can kind of mitigate the losses that I've been experiencing. Your self-directed IRA, that's where we're going to come into play.
Okay, so I kind of have a question about this. So if you're only investing $6,000 a year per all your IRAs, how do you grow that money fast to make $1 million at retirement? Like, because if you start at 2059, that's 40 years. That's 240,000. You have to 4x your money across a lifetime, just 4x your money across 40 years to get that $1 million in. So like, what type of investment can they do to increase their IRA? Because like one thing, like, so we were dealing with this paperwork recently, and for them, they couldn't do a loan document because it was considered usury, and we're just giving out great returns. So like, is there ways around giving out great returns, especially as us investors we're trying to give great returns to our private capital? Like, is there ways to disperse funds to give away great returns because
that's what I was going to ask too. So the amount that we were going to pay back the gentleman for investing, they said we couldn't do it because it was too much. We couldn't pay him back that much.
Yeah. So that one, when they were talking about usury rates, is specifically for the notes, right? That the usury rates, every state's a little bit different. I think in Texas, it's 18%, right? Honestly, believe it or not, that's to protect you guys. Right? If they were the usury rates, let's say if they were to go to default, that means you're not going to you would only have to recoup the funds to cover 18%. Anything above that, you guys wouldn't have to cover. Now, this is in the case of default, right? Yeah. But when it comes to growing the account fast, I don't think it's necessarily the types of investments. It's the structure that you need to take advantage of, right? Okay. And what I mean is partnering. That's the biggest thing whenever we're looking at a small dollar IRA. That's the biggest strategy that we tell our clients, right? If you have a small dollar IRA and you're looking to make these investments, right? More than likely, someone who has a larger IRA. Someone who has funds saved up, that they worked for a company for several years and they rolled over their 401k, right? Well, let's say they're looking to lend out $100,000 note, right? But you've only got 10,000. Let's say you got 10,000. You reach out to them like, hey, instead of you lending out 100,000, do you think we can draft up this $100,000 note to show 90% being lent by you and 10% being lent by my IRA? All right, that way now I'm getting access to this investment that I otherwise wouldn't have had access to because I'm taking advantage of the partnering structure. Right, so I'm going to get that same return, but my investment opportunities open up immensely, right? Because now I'm not dealing with small dollars. Oh man, I have to do like a bridge loan, and that's really the only thing I get into. I can't do much more. No, you can purchase property, right? You take a small percentage of that property's ownership. I can lend on a large note, take a small percentage of it. I can partner with someone to get into a syndication, right? Now, obviously it depends on the type of syndication, but just shows you that really it's not the investment itself, it's the structure. It's taking advantage of that partnering.
Okay, I'm really we realized that too, and I'm like, I don't know if there's something else we could do, but the partner structure is a way to disperse and diversify your small amount of money. Because like when it comes to investing money, like the larger the capital, the easier it is. But like the small amount, it's really difficult and almost like cumbersome to deploy that small amount of capital.
It really is. It honestly really is, and that's unfortunately just kind of one of the hurdles, right? Because no matter what, if someone's using their small dollar IRA, it doesn't really matter if you're going private or public, right? The type of investment doesn't matter. Your returns are probably going to be limited, right? You can only grow that account so much. Now, obviously, you find your unicorn deals and you get a massive return. Good on you. But if those were readily available for everyone would do it, right? So that's really the biggest thing to take advantage of is going to be that partnering. Because keep in mind, when we're talking about funding an IRA, there's really two ways. There is moving funds, there's making your contributions, right? And then there's moving funds over from existing retirement accounts. moving funds over from existing retirement accounts is the way that 90% of people are going to fund their self-directed IRA, right? They've got that old 401k, they've got that old 403b, or they've got that IRA that they've had just sitting in the market forever, right? Usually that's how they're going to fund their investments. Now, by all means, it's definitely possible, right? It's definitely possible to just start from scratch and make your investments by slowly building them. But even when I'm on the phone with clients, I tell you, like, hey, it's going to be a lot of work, right? There's no way around it. I wish I had the golden ticket to just tell you, hey, here's how you get that IRA to grow much faster. But at the end of the day, it's going to require some work, right? And that's just the plain and simple of it. I never want to mislead my clients as to telling them that, hey, you invest into this. Let me tell you the secret, right? And they tell them, hey, you're going to have to take advantage of your network, right? The bigger network you've got, the faster you can grow your IRA.
I've seen this recently, and I don't know how often you see this as well. I want to ask this question, but people that like, oh, I have an IRA, I'm investing in it, and then they realize that they didn't direct it at all. They're just throwing money in the account, and they're not directing it at all. How often do you see that?
More often than you'd think, right? So when it comes to Quest specifically, right, our accounts are not interest bearing. So we actually tell people, hey, only bring over the money you need for this specific investment. So it doesn't happen too much with us, but it happens a lot when people are moving the funds over. They're like, I made an investment in my IRA, right? I made an IRA investment. Like, the IRA is not an investment. It is a vehicle, right? You can get into a car. It doesn't matter. You're not going to get anywhere if you're not driving it, right? It is just the investment vehicle. It is where the investments are going to sit. So it does have to be invested further than that. But yeah, you're absolutely right. I've definitely seen that before, and I always just have to, like, I'm so sorry about that. Someone should have told you. I'm sorry that you're just now getting in contact with us.
Yeah, it's. I saw it recently, and I'm like, man, I've been doing it for 20 years, and like it hasn't done anything.
Yes, yeah, and that's if you were lucky enough to put it into an interest-bearing account. God forbid you put it into an account that had no interest, and that means your money just sat there and did nothing.
So there's actually IRA accounts that they're interest-bearing, meaning they'll take away from money vested there.
Yeah, so whenever you're looking at that interest-bearing account, really that's where those brokerage accounts are going to come in, right? Okay. This account, we're going to take the excess cash and we're going to invest it, right? Now, every company has a different strategy for doing this. Quest, we don't offer it because we really just focus on self-directed IRAs, but a lot of other custodians will allow you to put the funds there, and they'll tell you, like, hey, we'll give you a minimum 2%, 1% return. It's not very much, but yeah, they are interest-bearing.
That's interesting. So I want to talk about like transferring over funds. If they have an original IRA, there's no tax event money to transfer, fees like a wire transfer. For people that want to invest in self-directed IRAs, like if they have a 401k and all that stuff, is there like a money to transfer, like a wire transfer, or is it just paperwork, or is there some type of fees involved?
So really, it'll depend on the custodian. All right. Okay. Usually for receiving funds, most custodians won't charge you anything. Some do. It's unfortunate they'll charge you a wire fee even for incoming wires. I've never understood that. But usually all you're looking at is going to be the fee for the method that you send the funds out, right? So if we're transferring out to another custodian, we don't have any transfer fee. You just got to cover the wire fee. If you send it as a wire, $5 if you send it as a check. That's really it. All right. Now, other custodians, sometimes if you're closing out the account, there's like a termination fee. Sometimes there's a wire fee plus a transaction fee. So really, it really just will depend on from custodian to custodian. I always advise when you're looking at custodians, look at the fee structure, right? Some are percentage based, some are fee based, some are transaction based. You just got to find which custodian works for you.
So, and this is kind of like that fees. So what does Quest charge for as a custodian? So I know you guys you're the vehicle, but you have maintenance that comes in. So what's your fee schedule for like hosting that funds availability? And like, do you charge per transaction or stuff like that? Like where do you guys make money as far as what that fee schedule looks like?
So for us, it's pretty straightforward, right? It's $100 to establish the account. Once we get it established, we give it its own name, its own address, and like I said, its own social security number and asset protection that's going to be built within the IRA. From there, these next fees wouldn't be incurred until they actually funded their investment, right? We don't We don't charge for incoming funds. So those transfers, completely free. The account's just going to get them. But when they go to actually make their investment, what we have is a 125 asset purchase fee, right? What that's covering is we're assigning a processor to them that, like I said, is going to work directly with them for this investment. So we're going to work with them and any borrower, title company, syndicator, whoever it is, right? We're going to help gather up the documentation. We have 2 sets of auditing teams. The first ones are working directly with you. Once it looks good to them, they send it to our back-end quality control team that then audits those documents fully. What we're looking for, compliance investing. That's really the meat. We're not policing it. We're not advising on the investment. We're just making sure they're not doing anything that could get them in trouble down the road. All right. Now, if they want to send the funds out as a wire, just a $30 charge. That's what we get charged by the bank. But if they can send it as an ACH, ACHs are completely free to them. All of those are just their one-time payments to make the investment. The only recurring payment that they're going to be seeing is their annual administrative fee. All right. So it depends on the value of the account, but the maximum that it can be is going to be $350 per asset per year, right? So it's just $350 per asset, nothing more. And that's covering the back-end reporting, right? We've got to generate the 1099s, the 5498s. We have to keep an updated list. We have to report to the Texas Department of Banking of all asset values, right? So all of those things for $350 a year, I don't think it's a bad deal.
No, that's amazing, man, because we know what it takes. Filings, keeping records, keeping track of all that stuff. That's in a business in of itself. And if you're an entrepreneur, if you're out there, you need to focus on what's in your business. You can't be worried about, doing those tasks. Yes. So to have a third party company doing that, especially for a couple $100s a year, that's amazing. Right.
Yeah. And that's regardless if it's $1,000 investment or $1 million investment, $350. And that's the maximum. It could come out lower than that.
Wow. Yeah, that's great, dude. So I know we've covered a lot of what Quest does, and we've talked about different types of accounts. Can we talk about your specific type of avatar? So who are you looking for? Who is an IRA right for? Like, should everybody open an IRA, or should some people wait till they're in the a certain stage in life or in their business, or who are you looking for to do business with, and how would they contact you?
Yeah. So I think everyone should have an IRA, right? Whether Quest is the best fit for them is going to depend, but off the bat, everyone should have an IRA. Now, when it comes to an IRA at a custodian like Quest, usually I'm looking for a couple things. Right? When I'm talking to them, if they're just getting started and they want to be passive, they're not looking for something to make their investments in. They're not looking to pursue anything specific. They just want to start building a retirement account because they know they should, right? Which is absolutely correct. They should, but that means we're probably not a good fit with them, right? One thing that we pride ourselves on is that we are not just churn and burn, right? We're not looking to just open up accounts and then forget about you. Yeah. We turn business away because we know that at the end of the day, they will keep us in mind. And when they get to that stage of their investment or their retirement building, they're going to come back to us. We play the long game. We're not looking to just sell products. All right. Now, on top of that, let's say now they are looking to be more active. Awesome. Are you looking for something that is real estate guided, right? So private money lending in real estate, syndication, private entities, right? It can be a little bit outside of real estate, startup companies, right? We've seen investments into small companies like that. Are you looking to do fix and flip, single family homes? What types of investments are you looking to make, right? Like I said, some people's bread and butter is the public market. Awesome. But that's not what we do here. We can't give you any publicly traded assets. So if you're looking for the public market, we're going to send them to someone like Fidelity, Charles Schwab, Vanguard, TD Ameritrade, right? But if they are looking for those real estate style investments, we're here for you. Also, because we know that this is not this is alternative assets, there's a lot of education and due diligence, right? That's the one thing that people forget about how important those due diligence steps are, right? If I go purchase a stock, it's as simple as, do I think it's going to go up? Right? Obviously, it's deeper than that. But overall, do I think it's going to go up or do I think it's going to go down? That's what my due diligence really sums up to. Real estate style investments, man, you want to do single family homes, your due diligence is now on the property, on the area, on the market within that area, right? I'm doing lending, my borrower, now I got to look at both a borrower and a property. If I'm syndicating, I'm going to do diligence on that syndicator because it may not be a secured note that I'm lending out, or it's not necessarily the most asset-backed investment, right? So that I'm looking for someone who understands that due diligence is going to be key, right? Now we supplement that. We can tell you, we don't do the due diligence for you, but we have hundreds of videos showing you what you should be looking for. We do interviews with people in the industry that tell you here's what they look for, right? But someone who's going to, like I said, be that entrepreneurial mindset that's going to put the work in, because at the end of the day, private assets come with a bit of work, right? So that's really who I'm looking for. Seasoned, not necessarily seasoned, but someone who's knowing what they're getting into, someone who's got the capital to make it work, and also someone who just simply is looking for alternative assets, right? Some people will call into, they know an IRA custodian, and we're the first one that they found on the internet, and they simply don't know that we're private assets.
Yeah. So one thing I like that you guys do is you guys have like quarterly or monthly events all over Texas, because Anthony actually went to one a couple weeks ago, so it's kind of cool. Can you tell a little bit of people about that?
Oh, nice. Yeah, I'm glad you got to show up. So every Tuesday, every Saturday at noon, we host a class virtually, right? It's different every single time, right? New speakers come out. We record the classes, put them up on our YouTube channel and our education center. On the first, second, and third Tuesdays of every month, we host in-person socials at our Houston, Austin, and Dallas offices, respectively. Now, what that's geared toward is going to be networking and deal pitching. So how it works is we'll have someone come out, first 30 minutes, right? It's just going to be networking. Everyone gets to meet everybody. Then they're going to present for an hour, all right? 45 minutes to an hour with some Q&A. And then after that, we allow for more networking and deal pitching, right? So if you've got a deal, let's see, or if you just got money, you've got capital, like, hey, I'm looking to lend out, let the crowd know, right? Let everyone know in person. And we also have audiences virtually, right? Also, on the fourth Wednesday of every month, we have our virtual networking happy hour. We've had people from all across the country. As a matter of fact, the last one I hosted, we had someone from the UK who had joined. That was crazy. I didn't expect that. Now he lives in the US and he was traveling abroad, but he still wanted to attend. It was pretty cool just getting someone, being able to say, hey, we got someone from the UK here. But yeah, we host tons of networking events, right? The reason is because as your custodian, we can't endorse these investments. We can't tell you this is good, this is bad, you should go with this person, you shouldn't go with this person. So we take the next best step. It's just getting everybody together, getting you the opportunity to build that network that you can start making your investments.
Okay, I didn't realize you guys didn't advise. So I was thinking like you might say, hey, man, all we do is lend, right? So we're looking for big ranches, stuff like that. So I thought maybe their advisor could be like, hey, man, I wouldn't invest in land. You'd rather do apartments. So you guys don't scrutinize the investment. You just make sure that everything's structured properly and all the paperwork is proper. And all that.
Right. Yeah. So that's when you've gotten to that point, right? But how it works is when you first join Quest, right, you're going to get assigned an IRA specialist. That's the team that I'm on, right? So we have a team of IRA specialists that are going to walk you through and educate you as much as we can. And that's the key, is we're going to be sure you are fully equipped. We cannot tell you that's a bad investment. What's the next best thing that I can do? Is I can be sure you know everything you need to know to identify that that's a bad investment, right? That's what we do. We focus on education. That's why we have so much material that we just push out constantly. We're being sure all of our investor clients are fully equipped to make the best decisions that they can.
All right, I like it. I like the distinction. I just assume like, hey, we have your cash. We're not going to give it to you for something stupid.
Like we tell people, we've had people enter into notes that are at 1%. We call and tell them like, hey, this is at 1%, right? This is just being sure. They say, yep. Okay. All right. We'll do it.
Whenever you find that guy that wants to dump into some 1% notes, send them my way. Okay.
Yeah, so I tell them like, sir, I've got the perfect opportunity for you. All right.
Yeah, we want to talk to that guy.
So I really appreciate you coming on. It's very informational. Like I said, we've been dealing with this recently. If everybody hasn't dealt with this, I hope you learned something, because we've been kind of dealing with it firsthand this last week. So it's kind of interesting to talk about it right now.
Yeah, the first time you're exposed to it, honestly, it's a lot. It's a lot, and it seems overwhelming, right? But that's why people like us are here, right? We set up consultations. I'll have a consultation with every single one of my clients before they ever open up the account with us. That way they know the rules, right? Because it's who knows? Who knows? Oh, IRC 4975 will tell me what I can and can't do. No one knows that, right? That's why we're here, to let you know what you can and can't do, the types of investments that are available to you, and how the process works. We really break it down, try to simplify it as much as we can.
So what's the best way to get a hold of you? We got questcompany.com, and then we have your email as well as Zachary.
Right. So yeah, you guys can shoot me over an email, zachary.wilson@questtrust.com, or if you want to give us a call, 281-492-3434. My name is Zach Wilson. Just ask to speak to me, or my direct extension is 3648. If I'm not available, guys, any one of the IRA specialists, right? We have a whole team here. We have 34 IRA service professionals, certified IRA service professionals that are able to answer any question you've got when it comes to your IRA investments. So again, if I'm not available, just ask to speak to an IRA specialist, and any single one of us will be happy to hop on a call with you then, or set up a consultation for a later time that works best for you.
Oh, there you go. This is a random question, but is there a quote that is yours or somebody else's that you resonate with?
Oh man. Okay. Oh, it sounds bad, but you know what the first one that came into mind was I just picture the Wayne Gretzky quote. You miss 100% of the shots you don't take. Wayne Gretzky, Michael Scott, Zach Wilson. All right. All right, so I'll stick with that one. I'll stick with the office quote.
I like it, man. Yeah, we do shoot a lot of shots, and we'd rather like make a mistake, get the data, and then move on to the next one. So yeah, I'm down with that.
And honestly,
I'm down with taking
that's the biggest hurdle, right? That's what I always tell people. It's like the first step is always the hardest, right? Always the hardest. Once you take that step, there's a lesson to be learned. It gets a little bit easier the next time, right? But it's just about doing it. Honestly, you just have to take that first step, because otherwise you'll never get to where you want to go.
Boom. With that, we will leave you. If you enjoyed this episode, go check it out. There's more like it probably underneath this episode. We appreciate everybody listening in, and thank you, Zach, for coming on. And I hope you all learned something, because I did. Y'all have a great day. Thanks for coming on. Appreciate y'all. Appreciate Anthony.
Yeah, thank you guys for having me. Y'all have a good one.
Hey guys, we hope you're enjoying this content. If you have leads that you need to dispo anywhere in the country, please visit hivebc.io, like hivebuyersclub.io, and we'll help you move those deals that you need to get into the marketplace.
The show is sponsored by The List Guys. Do you need more leads in your local or virtual market? 1 in 10 small businesses don't invest in any kind of marketing. The List Guys have over 35 plus list types to choose from, and you can mix and match any list or criteria. We also use the skip trace list and provide up to 7 numbers and email addresses. Every list you purchase will be scrubbed against previous purchases. The List Guys are here to save you time. Contact the List Guys today at www.onelistguys.com. That's www.1listguys.com.
We called the guy, he had it listed for $1.7 million for a year, didn't move. I got on the phone with him, so I asked him a bunch of questions. I said, what are you gonna do with this property? What did you buy it for? What were the intentions? Why didn't you list it? Are you planning to list it again? No, I'm not gonna list it again. Cool, all right.